Hello guys, welcome to i-tutor Academy. In today's session, we will start with the unit 11, that is balance of payment, MMPC-003. So let's begin with the objectives of this chapter. After reading this unit, you should be able to explain the concept of balance of payment of a country and its major components. Highlight the importance of balance of payment for an economy and analyze India's balance of payment at present. And the structure of these units are introduction is there, importance of balance of payment, components of balance of payment we are discussing, and basic BOP accounting rules, equilibrium in balance of payment, balance of trade and balance of payment, factors affecting balance of payment at central bank, and trends in India's balance of payment. Summary keywords are there and self assessment questions also there in this unit. So let's begin with the introduction part. The balance of payment for a country can be defined as systematic record of all the transactions between the economic unit of one country such as households, firms and the government and the rest of the world in any given period of time. This includes all the transaction records made among the individuals, corporates, and the government and help in keeping and flow of funds in track to develop the economy as a whole. Balance of payment is the sole integral determinants of the health of an economy as well as its relations globally. It portrays the overall transaction of an economy with the other global economies during a given period of time in systematic and prudent manner. Next is importance of balance of payment, that is BOP. What are the importance? The BOP reflects the financial and economic status of the country. BOP may act as an indicator to determine whether the country's value of currency is appreciating or depreciating. And the BOP statement helps the government in making decision on fiscal and trade policies. BOP statement provides vital insight into the economic dealing of a country with the rest of the world. A close study of the BOP statement and its component would help in identify the trends in which might be beneficial or harmful for the economy and thus help in taking appropriate economic measures. Components of balance of payment. There is two main components are there, current account and capital account. Okay, so under this merchandise current account, services are there, transfers are there, earnings are there. You just go through this chart in your Ignou study material. And capital account, there is loan and borrowings, investment, foreign exchange reserves are there. So this chart will explain simply for you the concept. And the current account in the BOP comprises the transaction in goods and services alongside transfers during the current time period. So current account is equal to value of export minus value of import plus net transfers from abroad. Okay, so it's, and again it simplify the net export plus net transfers from abroad. Okay, and the next export are also termed as the trade balance, which is the net sum of the country's export and import in goods as well as in service. And again, there is a capital account. The capital account record all transaction in asset, and asset may include any one of the type in which wealth can be held, for instance stock, bond, government debt, etc. Purchase of an asset records a deduction in the capital account. And the balance of payment, that is equal to current account plus capital account. Okay, that is the equation for balance of payment. Balance of payment is a surplus, that is deficit, if both the current and the capital account combined has surplus deficit. Okay, thus a deficit in a current, that is capital account, doesn't alone lead to the balance of payment deficit. It has to be outweighed by a large surplus in the capital current account. So thus it is very important to keep the basic rule of BOP accounting in mind. Okay. And next is basic accounting, BOP accounting rule. What are the basic accounting rule? All transaction leading to a net receipt of foreign exchange creates a credit, that is surplus, in the corresponding account. All of you know the credit, debit, everything, right? So whereas if any doubt, you can just contact our contact number or you can comment it on our comment box. Okay, so you just clarify the concept first. whereas all transactions leading to net payment to foreign countries create a debit, that is deficit in the corresponding account. When the value of exports for a country exceeds its import, it accumulates more of foreign exchange, leading to a current account surplus for the country. Similarly, if the sale of domestic bonds to foreign countries, that is borrowing from a foreign country, exceeds the purchase of foreign bonds, that is lending to a foreign country, then there is a capital account surplus for the domestic country. A foreign loan repayment, however, is recorded as a debt in the capital account as it involves outflow of payment in foreign currencies. A deficit, that is surplus in the capital account, is termed as net capital outflow, that is inflow from the country. A current account deficit in a country is necessarily being offset by the capital account surplus in the economy. Double, that is entry book keeping. So you just go through this column for the details of entry book keeping. The BOP accounting follows the system of double entry bookkeeping, in which all the transactions are recorded twice, one as a credit and the other as a debit. Okay, so and other things, you just go through this column. And next is equilibrium in balance of payment. The balance of payment of a country depends on the record of transaction both in the current as well as in the capital account. A surplus in the capital, that is our current account, records an inflow of foreign exchange into the country, that is supply of foreign exchange exceeds its demand, whereas a deficit in the current, that is our capital account, leads to an outflow of foreign exchange, that is demand of foreign exchange is higher than its supply from the country. Now that we know what balance of payment means and how it works, let us try to understand what is mean to have the balance of payment of a country in equilibrium. A country have its BOP in equilibrium only when the demand for its foreign exchange reserve equals the supply of foreign exchange, when both the inflow and outflow of foreign exchange from the country are equal. If a country's inflow of foreign exchange exceeds its outflow, it's said to have favorable balance of payment or BOP surplus. Similarly, if the country's inflow of foreign exchanges exceeds by its outflow, it is said to have been unfavorable BOP or BOP deficit. Okay, you just keep in mind. And the next one is balance of trade, that is and balance of payment system. One might have question as how is the balance of trade different from the balance of payment? Are they related or are they different concept? The balance of trade is a major part of the transaction in the current account of balance of payment. It is nothing but the net export, that is the difference between value of export and the value of imports. The BOT can either be positive, negative or zero, and determines if the country has incurred a net profit or loss from the net exports. It depends only on the export and import of goods and services and doesn't take into account the transfers and financial asset transaction. A positive BOT may result in surplus of foreign reserves in the country, which can be major determinant of a sound economy. A negative BOT can lead to outflow of foreign reserves and can lead to disequilibrium in the economy's BOP. The ideal situation turns out when the BOT equals zero, that is net export, which may not necessarily be true in all cases. And balance of payment BOP is a broader concept and includes transaction records from the trade balance, net transfer and transaction in financial assets, capital account transaction. The BOP is an indicator of whether a country is having surplus or deficit of foreign reserve. Any receipt of payments in the form of export payment, gift or remittance or selling of bonds leads to a surplus in the BOP, whereas any payment such as payment of import, transfer to abroad or purchase of foreign bonds leads to deficit in the BOP. The BOP is a crucial indicator of whether the country is having a stable economy or not. So this is about today's session. If any doubt on this BOP, balance of payment or balance of trade till now, you can just contact our contact number. Also you can comment it on our comment box, we will reply to that. Okay, and that's about today's session, and further we will discuss on next video onwards. For more videos, you just Do like, share, and subscribe our channel. Thank you so much.
i-tutor ES presents Ignou MBA, complete syllabus coverage classes and individual semester base, subject coverage program for MBA students online and flexible sessions. For more details, contact 62382 17885.